Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is our November market update. So the Phoenix real estate market, as it has been over the last couple of months, is pretty stagnant. So we're still hovering around 18 to 20,000 active homes on the market, and that is very balanced between sellers and buyers. So our listing inventory is about 30% below normal, while buyer demand is also about 30% below normal. So as new listings come to market, they're being absorbed by the current buyers that are looking, and so we're staying relatively flat in the real estate market. You can imagine that as we head into the holiday season, that Halloween through New Year's timeframe, not a lot of new listings are going to be coming to market just based on seasonality. Families, people, they're more focused on the holidays rather than selling their home. From a buyer perspective, this traditionally is the best opportunity and the best time of year to get a really good deal. So those sellers that are already on the market or are coming to market have to sell, and they're more willing to negotiate to get their home sold before the end of the year. So if you are shopping in this market, start being more aggressive in your offers to see what you can get the seller to commit to. If you're out shopping for homes, one of the things to really pay attention to is whether or not the home is vacant. If the home is vacant, then the seller is very motivated to sell that property. They're either a flipper who probably has a hard money loan on that they're paying every single month at a much higher interest rate than what you're going to get from your lender. They are an investor where it was had a tenant in place for a period of time, so they need to sell. Could be an estate situation, divorce situation, whatever it is, those people have moved on to something else and they have to sell. So if the home is vacant, you know that you can be a little bit more aggressive in your offers. If the home has been on the market for a while, now the average days on market for Phoenix now has shot up all the way to 45 days, which historically is still very low. Typically takes 3 to 6 months to sell a property, so 45 days on the market still isn't terribly long. But if you start seeing a home that's on the market for longer than that 45 days, you can start being a little bit more aggressive in your offers as well. When a home is brand new to the market, sellers tend to be at their most cockiest and less willing to negotiate if you're submitting an offer on it right away. So mortgage rates are still high because inflation is still high. So inflation, in my opinion, is going to crack and it is going to start to come down. It hasn't yet because a majority of the inflation that the Fed is looking at is made up of rent or shelter. And that is a lagging indicator, and it takes a while for those prices to come down. I have noticed in a lot of my networking with agents across the country that in Phoenix, we see things first and then it kind of spiders out to the rest of the country. Rental prices in Phoenix are flattening and starting to come down because there is extra inventory on the market. Landlords, property managers are starting to use the MLS to list these for rent. And when they do that, we know that they are having trouble renting those out. Prior to the market cycle that we're in now, they were just throwing these up on Zillow, Realtor.com, some of the free websites that are out there and not listing them in the MLS because they were getting snapped up. Well, now that's not the case. And in some of my networking, I've spoken to some property managers, and I have found out that there are extra 3-bedroom, 2-bath homes that are just sitting on the market. The 4-bedroom, 2-bath homes are getting picked up really fast, but there is extra inventory of 3-2s. So if you're an investor, keep that in mind. If you're a landlord looking to rent your place out, if you have a 3-bed, 2-bath, it's going to take longer to get that filled. You're probably going to have to discount what you're asking for in rent. But all this is signaling that I think rents across the country will start to come down. Therefore, we will start to see inflation drop, which will then lead to mortgage rates dropping. But I think that's going to be a 2023 story, not a 2022 story. You can count on the Fed in November hiking rates by another 75 basis points, and then I believe that in December we're going to see another 50 to 75 basis rate hike as well. So a question I often get asked is this a good time to purchase? And I think that it is. I think this is the best market we've seen for buyers since 2014 because there is no competition. You've got sellers who are kind of getting a little bit nervous, are super willing to negotiate where, 6-8 months, a year ago, they weren't. As a buyer in that market, you had less choices, it was hyper competitive, and you're having to come out of pocket anywhere from 25 to 100,000 or more in cash above the value of the property in order to even have a fighting chance. This market's wildly different. You have a higher interest rate, but you are able to negotiate the price down. You're able to get the seller to cover your closing costs and buy your mortgage rate down so that they're paying basically your mortgage interest up front to get you a lower rate, and you're getting repairs made. So I'd much rather be a buyer in this market because it is so much easier to buy a home and then refinance later. I would rather not be competing with all the buyers that are going to return to the market when those rates drop. I'd rather already own my own home and then refinance when the rates drop. That's going to be way easier than trying to compete with all these buyers that come off the fence when those rates come back down. So if you're buying in this market, it is more important than ever to shop for a lender. They are all offering different loan programs, and they've all got fancy names. So there's a 2-1 buy down, there's a 3-2-1 buy down, and there's just a lot of different names for these different loan programs. They have different fee structures and different interest rates. So you definitely want to shop around for a good lender. And one of the financial institutions that gets overlooked, and I think it's a big mistake, are credit unions. So when we think credit unions, we think savings accounts, we think auto loans. These banks are not for profit, meaning they can't earn a profit, where the big banks and your lenders, they're all looking to make money, right? So a credit union is not looking for that. So they're able to discount their rates. And one of the credit unions that we've started working with is offering 1% below where rates are at now. So rates are hovering around 7%. So just out of the gate, they're offering 6%. They do relationship pricing. So if you open up a savings account with them with just $1,000 and do auto pay on your mortgage, 0.5% discount. Then if we get the seller to buy your rate down, we can still get your rate into somewhere between the mid 4s to low 5s. So these institutions are offering a really good service that not a lot of people are taking advantage of right now. And the lenders that work for them are also paid by salary plus bonuses. So they have a lot wider margins where they can discount and afford to give you much, much more competitive rates versus the banks and traditional lenders. And if you're looking to sell as we head into the holiday season, unless you are forced to sell, through a divorce, through an estate sale, because you're moving, one of those situations where you really have to sell, I am probably waiting and holding off until after the holidays, listing in that Q1 timeframe when that seasonality really starts to kick back in. I do think that mortgage rates will start to drop in that late Q1, early Q2 timeframe where buyers are going to return back to the market. So unless you're in a position where you really have to sell, I'm probably holding off until after the first of the year. This is our November market update. Thank you so much for tuning in. Make sure to give it a like and subscribe, and we will see you next time.